These will be the worst 2 trading days of next week. If this stat comes true, and there's over a 63% chance, stocks will. On Friday, we saw the NASDAQ making another new all-time high, and we saw the Fear and Greed Index notch up a bit, almost in the middle of greedy territory. However, there are some clear warning signs we most certainly need to pay attention to. For instance, if we come over and look at the 10-year yield, notice on the daily chart, the MACD indicator on the bottom, we just now got a bullish cross of the lines. And if you look at this structure breakdown point that we had yields breaking down from 4.186. If we get back above that level, that most likely will put a little bit of pressure under stocks. And that kind of goes along with this article right here. Why the bull market for stocks may now hinge on the 10-year treasury yield. For quite a while, everyone's like, oh, the Fed's going to cut, the Fed's going to cut. Well, we finally got the Fed to cut. So why are we seeing the 10-year yield on the move up higher? Also, let's look at this logically real quick. If we go ahead and we put the SPY on the weekly time frame, we go ahead and we measure from the swing low all the way up here to the swing high. Notice the SPY has rallied 38% from the lows that we saw back in April. So in 5 months, we have rallied 38%. The average return for the S&P 500 is only roughly 9 to 10% per year. Now on Friday, when we come over and look at the volatility index, the VIX, also known as the fear index, notice on Friday, we saw the VIX actually gapping up at 9:30. And for the majority of the morning, we saw the VIX on the move up. I kept chiming into the live stream saying, watch out, watch the VIX. Now, ultimately, the VIX did end up rolling over. However, the VIX never made it all the way back down and fill in the gap. And when we come over and look at how the indices fared on Friday, notice the Dow was up 172 points. The NASDAQ was up 160 points. S&P 500 was up 32 points, and the Russell 2000 was down 1.86. However, one of the warning signs a lot of people weren't paying attention to is right here. When we look at advancing issues versus declining, we had 63.7% of issues declining on the day. So while majority of the indices were in the green and some of them making new all-time highs, we had more issues actually down on the day. Then when we come over and look at how the sectors performed out there on Friday, we saw basic materials and technology were leading the way. The big laggard out there was energy. Now, with energy being weak, this has helped out the CPI reports. However, I want to caution you guys, when energy is weak, that's also a very clear warning sign that the economies around the world are most certainly slowing down. If we come down here and we look at the 1 week performance real quick, communication services and technology were the big leaders out there for the week. And that's really no surprise. When we look at the NASDAQ, look at that weekly candle. We closed almost at the very tippy top of the range. The MACD indicator on the weekly chart still looks strong, still pushing on up, good separation of the two lines. However, the stat that I'm going to share with you guys here in a few moments is actually going to show that this week may be the week we start to get a bit of a turn. However, let's not get too excited talking about a crash just yet. If we do start to pull back, one of the areas I want to watch on the cues would be this prior all-time high right here, somewhere in the ballpark of 583.44. If we just simply come down to there and we reject and continue up, that would be very, very bullish. But I do want to caution you, when we look over here at the composite profile and we start looking for areas where there's been fair value in the past, and we can know that because the areas that stick out in the profile signifies the areas where we had the most amount of volume traded. Now, in order to have the most amount of volume, that means both buyers and sellers were willing to participate at those price levels. And quite often when we start to get a pullback, those are the levels that quite often will come back and act as a magnet. If we pull a fib from the low all the way on April up here to the current all-time high, notice where that 38% level comes in. It comes in right between those two high volume nodes on the weekly chart. Now, with us closing up on the week, we have the Fear and Greed Index at 62 back in the greed. And then we look at the most recent investor sentiment survey this week coming in at 41.7. So we can see the bulls stepped in a big way. After a couple weeks of the bulls declining, this week they jumped from 28 all the way to 41.7. However, look at the bears. Bears still out there at 42.4. The bears did drop down. The undecided also shrunk out here this week. Now, along with paying attention to the 10-year yield, what are some other things that could potentially derail this rally this week? Well, let's not forget Russia keeps flying into other people's airspaces. So this could be an event that's not scheduled on the economic calendar that could cause us some problems out here. However, when we do look at the economic calendar, the 2 days I'd want to pay attention to is going to be Thursday, final GDP and the weekly unemployment claims, durable good orders and such. And then on Friday, we get the core PCE price index. Keep in mind, this is the Fed's preferred measure of inflation, and this will likely have some type of effect on the 10-year yield. Now, with the 10-year yield going up, we look at the dollar index. Dollar index over the last 3 days also has been on the move up. Ever since the dollar index went below the swing low over here, you can see intraday it spiked below it. It's gotten back above it. That could be a valid test, and we could see further dollar strength from this point on. Well, with the dollar going up, we come over and look at gold. Why is gold also on the move up? Gold moving up is saying, uh-oh, hold up. We're a little bit nervous. We do not think inflation is under control just yet. And if inflation is not under control, what is that going to be able to do in terms of the Fed's ability to continue to cut rates, which we all know the market loves a big sugar high. As we come over, look at this stat brought to us by Wayne. Looking back the last 50 years, what it says about this next week is not bullish at all. We have only been up 8 times, down 22, and that is when the OPEX from August to September's OPEX is bullish by at least 1%, which we have met that criteria this time around. And look at Monday right down here. We've only been up 9 times, down 21. Also, we have a very similar stat on Friday, been up 9 times and down 21. And the total of the week, up 8 and down 22 for the week with an average drop of almost 1%. So with bearish stats like that for this week, it may be a good time to check out a prop firm like Take Profit Trader, where you can save 40% off the evaluation, 0 activation fee. Use code epitome at checkout. Now we come over and look at the Dow Jones versus the transportation index. We can see Dow Jones pushing on up, making another new all-time high this week. Then look at the trend line that we've had established on the transportation index, the chart on the bottom. We can see here's a high right here, lower high, and even this week, as the Dow made a new all-time high, look at the transportation index, not even close to making another new all-time high. Then we look at the 10-year versus the 2-year yield. Notice we're starting to see a steepening of that yield curve once again. And in history, when we see a steepening of the yield curve, watch out. Look back as we're coming into April. Was the yield curve steepening? Absolutely. And if you remember going back into April, what do we see? We saw the market on the move back down. However, we come over and look at the SPY versus HYG, high yield bonds. Now this week, we did see the SPY make another new all-time high, but then look at HYG. HYG is able to break swing points and continues to trend up. So if you look at this chart, SPY versus HYG, and you compare it over here to the Dow versus the transportation index, they're like, we're looking at 2 completely different things. It's not even the same market, at least when you look at it from a glance. So now let's look at the SPY on the weekly chart. We see the MACD indicator, good separation of the 2 lines, showing no signs of weakening just yet. You can see right over here, I think at some point the market will make its way back down towards about 613.29. And the reason for that is we had a little consolidation up there. We have broken out to make new all-time highs, and we still have not come back down to visit that level just yet. If we pull a Fibonacci retracement from the April low to the current all-time high, that swing point retest is not even enough to make a 38% retracement. Now, when we come over and start looking at this on the daily chart, this is where it starts to get interesting a little bit. One, you can see the anchor VWAPs in blue right here. We are well above those areas. We look down here at the MACD indicator. We do have a good separation of the 2 lines working up, but then look at the peaks in the MACD indicator. Is the MACD indicator making new highs as we keep seeing the SPY make new all-time highs? And yes, I know the SPY didn't make a new all-time high on Friday, but it's right there at it. On Thursday, we made a new all-time high, and the MACD indicator is nowhere close to making new all-time highs. So we want to continue to monitor the Fibonacci from the low right over here on September 2nd, because at some point we will get a pullback, and most likely it will be down towards the 50% retracement. However, the first stop I'd want to watch would be that 38% level. So now I went ahead and just threw some simple moving averages on the chart, on the daily chart, and notice from the white line right here to the upper part of the price on Friday, we can see from that area, we're roughly 13.42 points away, roughly 2% away from the 20-period moving average. However, if we start looking at the 50-period moving average, from the 50-period moving average to the high on Friday, that's just over 3.75% from that moving average. And if we scroll back, when was the last time that price has been able to touch the 50 period moving average. That was all the way back here on May 1st. So we're definitely due for a retest of that 50 period EMA. However, when we scroll this out here a little bit, when we start looking at some of the volume profile levels real quick, notice we have a high volume node right here, about 644.09. So even if the market is able to make it down towards this level, that really does not do anything in terms of destroying the context of the uptrend yet. And I want to emphasize yet, because things could be about to change. Now, when we come over and we start looking at the weekly profiles real quick, look at that last 4-hour candle. We got a nice little wick in. I like the location of it. When we look left, we had a prior swing point over here. We spiked up, we closed right back, right near that prior swing point just to the left. Now notice, this is gonna be 2 back-to-back weeks. Last week, we closed above value area high. This week, we are also closing above value area high. And given the fact of that stat that I showed that this week is likely gonna be very bearish in the market, is a higher probability that we come down to 66.99, which is gonna be value area high at minimum for the retest. More likely than not, we'll hit the point of control at 66.71.5, and maybe even all the way down towards value area low. Another critical point that we want to focus on is right here, this kind of valley within the profile, which I call the minus development area at 66.81.75. If we go ahead and we move that right over, that also is right within the vicinity near that high volume node at about 66.75. So anywhere in that area, I think, is a high probability we come back and test it. And let's not forget, the rule behind it, whenever we close outside of value like we did last week, we expect the next 1 to 2 sessions will come back and visit that area. Well, since we're dealing with a weekly volume profile, a session is defined by 1 week in time. Well, last week, we did not make it back to 66.05. We came close, but we did not make it all the way down there. So is this going to be the week that we go ahead and we clear out the value area high that we closed above this week and from 2 weeks back? Let me know your thoughts in the comment section down below. Now we come over and look at the daily profiles on the 30-minute chart. Notice value area high at 67.14. We closed above that on Friday. Also, we have a minus development area within the profile right around that area. So at minimum, Sunday night, I am going to be aggressively looking to hunt that level, especially if we end up gapping up higher, because now we know we're closing above value area high on the weekly and on the daily as well. And if we go ahead and we map out this ABC pattern that played out on Friday, the market was a little bit of an overachiever. It was actually able to make it to the 127 extension. Once an ABC pattern completes, quite often the market will do something other than continue in that direction. Now that could be a consolidation up here, or it could be a pullback in the market. Now notice 67.09.5 will be an untested point of control come Sunday night. And we still have an untested point of control from the prior week at 66.61. So in the event we get below value area high, I want to target the point of control. I want to target value area low, but then I also want to start focusing on some of these lower targets, like the point of control off the daily, and then some of the critical levels over here on the weekly volume profile charts. Now we come over and look at the QQQs real quick. Notice the Qs closed near the upper end of the range for the entire week. Nice bullish candle. That's 1, 2, 3 consecutive weeks up. The MACD indicator still looking awesome at this point in time. However, when we look at the fib, that 38% retracement is below a prior all-time high, but notice what we have right up in this area, the exact opposite of when we're looking at high volume nodes on the profile. This could be a low volume node, aka minus development area, where this signals inefficiencies in the market, and the market loves to come back and repair inefficiencies. So at some point, maybe not this week, maybe not the next week, but at some point, this will be a high probability target in the market. Now we come over and start looking at the daily chart real quick. We had to go ahead and adjust the Fibonacci retracement up here just a bit. Now we have 2 gaps back to back where we still have not come back and been filled. We have a gap on Friday. We had a gap up on Thursday. We are well above the anchored VWAPs at this point in time. The MACD indicator on the daily chart does look strong. Now I went ahead and removed the anchored VWAPs and threw on 3 moving averages, the 20 period in white, 50 period in blue, and then the 200 period over here in red. If we measure from the 20 period EMA to the closing price on Friday, it's about 3.3%. From the high, it's about 3.5%. Now, if we come over and look from the 50 period EMA up here to the high on Friday, that's almost 5% difference. And if we scroll back, we can see that we did hit the 50 period EMA right on here on September 2nd. But when was the last time that we touched the 200 period EMA? And that was all the way back here on basically May 12th. And you can see as you look at the chart, you just glance at it, we are starting to get a little bit too far extended past those MAs. Now we look over here on the 4-hour chart. MACD still looks strong at this moment. We're starting to see a little bit of a curl effect last week. However, it just came down, almost kissed it, and continued to grind on up. So still on the 4-hour chart, showing no signs of weakness yet. But then on the 30-minute chart, notice the MACD indicator did basically flatline out up here. We slightly have a bearish cross. However, look at that large gaping gap. We have not come down, tested gap support, or filled that gap just yet. Then on Friday, we had a gap up. We tried to come down and fill it. However, we failed to fill it. So now it's 2 back-to-back gaps. If we gap up again on Monday, you guys know the MO on the live stream. I'll be looking to short the market. If you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. Now, also notice on the daily chart, we are closing above value area high, which indicates we get back below it. Watch out for a retest of the point of control, value area low, and then the first gap to be filled, then gap support, and then the secondary gap down here on Thursday to come back and get filled at about 589.98. Now, we come over and look at the futures markets real quick. Hopefully, those of you that have followed my analysis videos, you guys probably already see what I'm looking at. Now, I know there are multiple things. One, we have value area high, which we are closing above once again. So just like the S&P, 2 back-to-back weeks. But then look at this minus development area within the profile. We really had a double distribution type of week. And we have a swing point right in the middle of that, which is going to be a high probability target, anywhere from 24,659 down here to about 24,638. Now, value area high is going to be a very high probability target this week, especially since it's back-to-back weeks. We're closing outside of value and we're starting to get stretch on the daily charts. And we have that very bearish stat that I shared with you guys moments ago. Now, value area high is going to come in 24,737 and a quarter. We start breaking that. That's when I turn my attention towards this swing point right over here in the middle of the minus development area, then the point of control, and then down here towards value area low. And then if things really get spicy this week, maybe all the way down towards 24,182. However, with that bearish stat, what did we say? We said roughly on average, we closed down 1% on the week. So if I go ahead and map that out to close it out, that really only brings us roughly right in the middle of that minus development area. So yes, it might look juicy. Let's go ahead, sell this pig. However, let's go ahead and proceed with caution. Now, as we come over and look at the daily volume profiles, we are also closing above value area high, 24,828 and 3/4. We have the point of control down below it, 24,817 and a quarter. Value area low down here at 24,731.25. Now, I do think value area high has a high probability being hit either Sunday night or Monday. So Monday on the live stream, if we have not tested that level yet, this will probably be a very good micro type of trade where I like to DCA into it and try to use that for a potential target, but we'll have to wait and see how exactly that sets up. And from Friday's videos, here are the 4 take profit trader winners. You must respond before the stock market open on Monday. Now, if you guys would like to learn a simple order flow trading strategy, then you want to make sure to check out this next video right here.